Well, at this point in the cycle, the first part of the cycle, crypto spring, Bitcoin outperforms because everybody wants the safest asset because it's still a bit sore from the bear market. They're not quite sure. And then when things start improving, liquidity starts coming back. Once global liquidity year on year starts going positive, well, then ETH starts outperforming. And I put that chart on Twitter the other day. It's very driven by the business cycle. It's driven by the liquidity cycle. So I just thought, well, that looks right. And then I use a bit of technical analysis to figure out, okay, is it about the right timing? So it's that driving it. And Solana was just a piece of luck because there's always going to be one breakout, like Ethereum was the last cycle, right? Really, I'm hyper-focused Solana.
Today's video is a clip from my interview with macroeconomic master Raoul Pal. I've posted the full interview on my second channel, The Crypto Nutshell, the first link in the description. If you want to see the full interview, it's packed with price predictions and Raoul reveals what crypto asset he thinks will perform best in 2024. Hit that first link in the description and subscribe to The Crypto Nutshell. Also, if you like what Raoul has to say, go and check out Real Vision. It's the second link in the description. He's currently giving away free Solana NFTs. Real Vision will undoubtedly change your financial future. But without further ado, let's jump in with Raoul. No need to give specifics, but does that mean Solana is making up the majority? Do you have a little bit of ETH and then is it shrapnel?
And I've been pretty public about this. I'm about 70% Solana, 20% ETH, 10% shrapnel, just more degen speculative stuff. And that's the bit I don't talk about because then people assume you're shilling and you're trying to do that.
Yeah.
And so, I learned that from the last time around. So there's 10% of it, more speculative stuff. Stuff like Celestia's in that. That's a one that everybody's gotten. I'm only copying other people because people I trust are in it. So that's why I haven't done the work myself, really. I shouldn't be taking big risk in it, but there's people I trust in it, which is, doing the wrong thing, clearly, but that's fine because it's in the 10% of my allocation. But really, I'm hyper-focused Solana. At this point in the cycle, the first part of the cycle, crypto spring, Bitcoin outperforms because everybody wants the safest asset because it's still a bit sore from the bear market. They're not quite sure. And then when things start improving, liquidity starts coming back. Once global liquidity year on year starts going positive, well, then ETH starts outperforming. And I put that chart on Twitter the other day. It's very driven by the business cycle. It's driven by the liquidity cycle. So I just thought, well, that looks right. And then I use a bit of technical analysis to figure out, okay, is it about the right timing? So it's that driving it. And Solana was just a piece of luck because there's always going to be one breakout, like Ethereum was the last cycle, right? And I had been following the Solana narrative and looking at the charts of the Solana ETH cross, thinking, even though it's selling off, it was like in this pattern that looked like it was going to break at some point and it was diverging. And then I had been at some very fancy private event in Utah by some boutique investment bank, and I met Tolly and I saw the kinds of people he was speaking to. They were like the head of YouTube and the head of Instagram and the head of Yuga Labs, and that I'm like, that's interesting. So this is not like a normal chain. This is like, these people know what they're doing. And I own some Solana, a smaller bit. But then I started buying in the sell-off because I'm like, this is not going to zero, in the big Solana collapse. I started too early, actually. I bought it in June in that first collapse. I wish I'd bought it even later, and I bought some later on when it got down to the $10 level. But really, it was me going to an event randomly. And a friend of mine I really, really trust, called Colleen Sullivan, who's at Brevin Howard, the big giant hedge fund, she started talking about Fire Dancer. I'm like, I don't know what this is. And then Tolly was the next speaker. I spoke, and then Tolly was the next speaker, and he was talking about Fire Dancer. So I went down the rabbit hole that weekend. I got home, and then I realized, oh my God, this is a game changer. It moves the TPS from a theoretical 65,000 to theoretical 1.2 million, which is fast enough for the entire high-frequency trading markets and financial markets. That and the compressed NFTs, I'm like, this is the trade. That weekend, when I'd looked at it, just got back from that Masari event, it broke out. and it's just been a fucking rocket ship since then. I didn't expect it to be up 10x, let's put it that way.
Okay. My dad also watches you, and I had to come home for Christmas and had to see him. And as soon as you called for Solana, that it was going to perform well, he put a decent amount of his portfolio, and he absolutely murdered my crypto portfolio, and he's barely in it, and he would not let it rest over Christmas. He kept showing me his portfolio and how he was absolutely destroying my returns, and I was just like, I should have listened to Raoul. I should have listened.
That is justice for him. I respect him for that. Trolling his son for being not as good as him at trading crypto. This is good.
And he probably pays 1% of the attention that I do to crypto, and he just destroyed my returns last year in the market. Now, another question I wanted to ask, sort of on the same token, is as we get deeper into the cycle, I'm sure you're aware that returns kind of drift out on the risk curve. So we see Bitcoin run first, and we're seeing it play out pretty much in this cycle as well. We see Bitcoin run first, then we see it flow to Ethereum, and then Solana and all the altcoins get a run, and then NFTs. Are you going to play the cycle around anything like that as we sort of move through it? Are you going to start allocating to CryptoPunks and Bored Apes or NFTs or anything? Or is that a great way to fuck up this cycle, trying to get too cute with it?
Look, some people are good NFT traders. I own a whole bunch. Punks, apes, Beeple, Xcopy, all of the stuff you should own. I've got a bunch of that. But I'm not even sure I can sell them, or if I want to sell them. Some people will trade it and will do very well from it. There will be an epic NFT cycle again. But really, it's an easy way to fuck it up too. The best thing is assume that if they're going up, the whole space is going up. So just stick with the program. And again, if you want to do the NFTs, put them in that 10% bucket. I'm sure people can figure out a bit of extra juice there, but if it all goes wrong, it doesn't matter. Because if you do get it wrong and you put it in some random thing that looked like it was the biggest thing ever and that project doesn't work, then and it falls, 50% in ETH terms, you just halves your ETH exposure. It's like, no. That's a way to fuck it up.
Speaking of not fucking things up, that's a huge mantra that you have going into this cycle, is do not fuck this up. So I want to ask you, let's say you're a first-time investor, perhaps you're one of these financial advisors that is first getting into crypto or Bitcoin. You're not too sure about it. Do you have a list of rules that you would give to a new investor? They know a little bit about crypto, maybe they saw it in 2021, they see it's coming roaring back. What rules would you give them, and some just basic principles to not fuck this up?
Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of a crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. Even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get in. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route, and maybe I can buy some more. I will be grateful for that because then it's out of the way and we can move forwards again. So I actually like them because it's like, my God, it's done. Right, next, let's go higher. So expect that. Don't listen to your friends and FOMO because your friend is making more money because he's bought some toad meme that's gone up 57x and he's now flicking through brochures for cars. It's like, no, don't do that. Stick with your plan. Make sure it's about 80% of main assets. No, main assets is not some random currency that you learnt about that you think is going to be the next big thing. That's not a big asset. That's in your 10% bucket. It's like, is it Bitcoin, ETH, Solana, and maybe some of the, maybe XRP, maybe whatever. There's a group of 10 that are really big. It's not in like Bitwise's index. Don't bother doing it. It's simple. If not, it goes in your 10% bucket. No FOMO, no leverage. You will be so tempted to go, well, maybe I can just lose some 3x leverage here. 3x isn't much, right? You know, these other degens are using 100x leverage. 3x is fine. 35% pullback, you've lost your capital. People don't realize 35% is normal. Hell, we've had some 50%ers in bull markets before. So that's 2x leverage. You're out. So just don't fuck that up. And stop trying to trade it. I literally don't know many successful, super wealthy investors that made it from trading. Paul Tudor Jones? Sure. But he's probably made more money by owning an asset management business, this hedge fund, than he has from actually trading. Yeah, Stan Druckenmiller. If you think you're Stan Druckenmiller, go get it. But you're not. The easiest way is to be the moron who buys and holds. It's just the easiest strategy in a market that does, on average, like 140% a year in the largest asset. You don't need to do anything else. You don't need leverage. You don't need to FOMO into other stupid stuff. Just do that. And then the other thing is be careful not to have to lose control of your coins. That's the final thing. So you've got it right. Bought the right asset allocation. You're being careful. You're filtering out the FOMO. You're having some fun in your degen portfolio. You haven't got leverage. And then suddenly you realize you've got on some stupid Thai exchange that goes down. And you're like, oh, fuck, I've just lost everything. I've done that. MF Global in the old finance world, that old head of Goldman ran MF Global, the largest brokerage, retail futures brokerage. I had all of my money in it. And it went bust in 2 days. It's like, boom, gone. Took 7 years to get my money back. So, people in Mt. Gox still haven't got their money back. So that's the other risk that you've got. So whether you're using a ledger device, whatever it is, you need to have that covered as well. Another one with wallets. Another way to fuck it up is, oh, look, there's a mint of some new amazing thing. Quick, attach my wallet. My wallet appears to be empty. That's really simple to stop. You have, if you've got a ledger, you have 3 or 4 different wallets within your ledger. One is the one you expose to any shit like that. It has no assets in it. You transfer money in. You exchange with the asset out. You then have one where you are selling or buying your assets and you move that into another holding wallet. And that doesn't really hold your important assets in. And then your important stuff, you put in a third one. Just don't blend it all together in some big omnibus soup and then suddenly go, oh, I want to get that free JPEG. And before you know it, somebody's taken all of your long, hard savings at the end of 2025 when you think you're about to buy a house and you're not. You're going to buy a cardboard box and live in the streets.